Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Friday, the 24th of November, 2006. Market just closed a holiday shortened session, and the S&P 500, the SPY on the screen right now, closed down 41 cents at 140.51. And the market gapped much lower, but then there were buyers out there looking for some Thanksgiving, Black Friday bargains, I guess. Not only out shopping, but in the stock market today as well. The market opened, the S&P 500 opened right down at S2 rather, and you can see that was pretty much the low of the day as the market rallied nicely right up to almost fill the gap, and then some sellers came in late in the day. Now, looking at a 10-minute time frame, you can see that it closed right on that 5-day moving average. And now this recent activity where we've had a couple pokes higher into this new high area after some consolidation last week, it tells me that maybe we're setting up for a little bit of distribution. But again, there's nothing technically here that really has me worried, except on this short-term time frame, we do have lower highs and some lower lows. So let's see if support at 140 holds first. I think that's going to be the most important thing in the immediate near term over the next week or so. And actually just below that at 140, 139, let's take a look and see what this level here is. But right around that 139.80, I think, is going to be the more important level. Breaking below that, I think then we've got a potential test of 139. But right now, really no damage done in the S&P 500. It remains in a very strong uptrend. But today we did see a little bit of selling, so that just gives us reason to be alert for the potential of further downside. And again, it's always a stock picker's environment is my belief. So there's always going to be good stocks and bad stocks to take advantage of. The semiconductor holders, SMH, continue to digest those gains from last week very nicely as it holds up above now this rising 10-day moving average. And it looks like it's waiting for this 10-day moving average perhaps before it does continue to move higher. Now, we had made a target a week and a half ago based on the inverted head and shoulders pattern that we saw in the intraday time frame. And I'm just outlining that on the daily time frame as well. But that target gave us a target rather of about $36.15. I still think that's pretty attainable here over the near term. We've got potential for a little bit of selling here at this little high just because that's the previous high, but I don't see that as much of a obstacle. There wasn't a lot of trading there, and if we can get above that and head up to that 36.15 level, well then on the weekly time frame it starts to put some of the bigger picture into focus, which is that maybe we could make a run up towards that 38 level. For now, we'll stay focused on looking for a move up to 36.15. Looking at a 10-minute time frame, you can see we're just consolidating through time in here. There's no real trend, and the short-term resistance where I think that we need to see this market get above before the buyers can take back control. It's about 35.65, 35.70. Above that level, I think then we see a quick move up towards that 36.15 level. So then we'll look at the Nasdaq 100 Trust, the QQQQ, and waiting for that to pull up here. You can see that on the 10-minute time frame, this market did hold that rising 5-day moving average, and that's been an important level here, not just over the last month or so, but during this whole rally of the last few months. So the Nasdaq finished with a slight loss, down 8 cents. Again, no damage to the uptrend there. I think the more important level of support right now is near that $44 level, and then at about 43.5 or so, and maybe that 20-day moving average starts to come into play. But looking at the 10-minute time frame, we did have that gap lower and a nice recovery. It finished with a slight loss, but nothing really stands out here that tells me to become very cautious. But at the same time, again, you have to keep looking at those higher lows and protecting your profits underneath those. MidCaps, MDY, as those are pulling up here. The MidCap SPDRs, same thing. We had that gap down. It came close to that rising 5-day moving average. Found a little bit of intraday resistance near Wednesday's highs, and then a slight profit taking in the afternoon. This is a healthy looking market, though, that perhaps will get a test in the next week or two down towards this prior level of support near 146. But The weekly time frame, it looks like we're starting to it's becoming very attainable, the highs for the year from back here in early May. So continues to act like a very healthy market, and the focus in here should continue to be on the individual stocks. So let's take a look at the stocks that I had mentioned recently. Didn't have any new ones for you last night, but I will have another one this weekend. ARXX we got involved in. I didn't write down the numbers, but we got basically stopped out with a gain of about a nickel in there. And UMC, this is a low-price Chinese company that trades on the New York Stock Exchange. I recommended it 2 days ago, and we gotten involved at $3.23. We were looking for a move up to 3.5 to 370 level. And today the stock had a great day, real nice volume in there. I didn't bother to read the news, but it gapped up and continued and closed near the highs for the day. So this stock continues to act very good. All I had to do, I guess, was complain a little bit on Wednesday. I was complaining that if this was a Nasdaq stock, it would probably be up near $5 a share, just because all the Chinese stocks are going, and these listed stocks just tend to be slower. But today obviously was a great day, so continue to hold this one. I would say stop maybe goes down below 336 or so, and you might want to even lock in some profits in this stock as well. Packeteer, symbol PKTR, we were in at $11.62 on Wednesday, and I had suggested a stop at $11.95, and wouldn't you know it, I nailed the low today with that stop. So that should have been stopped out with a gain of about 33 cents in there. Other stocks, Conexant, CNXT. This is one that we're involved in from $2.23. The stock's really not doing anything, but it's not giving us any reason to sell either. So continue to keep your stop in Conexant at about $2.20. I think this daily chart still looks like the stock has the potential to make it up towards that 200-day moving average near $2.55. I'm still holding the stock, and it continues to act good. ADSX was a stock I'd mentioned last week as far as watching that one. Not last week. The day off kind of screwed me up. But I'd mentioned it saying getting above $2.10. Looks like it should continue. And it followed through in there today as well. So ADSX, I mentioned here, and I mentioned right here. So hopefully you guys were participating in that one, because there's been some good moves in ADSX. Avanex also, AVNX, is another low-price stock here that had a nice pattern, and it continues to hold up well. So I would say stops in this one probably just below $2 and a penny.